All right, good morning, everyone. We're going to get started. Okay, U.S. markets, another solid session last night. Managing to kind of trade up about 0.75% again. You can see there, as per the last few days, every sector up across the board, outside of telecom, just kind of leaving one of the defensives lagging a little bit as guys, continue to put more risk on the table. I think we also saw some interesting trade action out of Asia on the back of the Chinese data that we had overnight. We'll get into that Chinese data in just a little bit, but you can see, at one point I think Japan was up, 0.5%. It's now down. Hong Kong was down. China was down. They're both now up. So we've had a little bit of volatility there. The yen has strengthened a little bit, I think, dragging on Japan a little bit, but you can see the rest of the markets have managed to put on about 0.5% on the day. Corporate action very light today, but we are starting to get into the meat of U.S. earnings season pretty soon here. We also have Burberry that was out earlier. The quarter one sales and revenue release, retail revenue up. Quite nicely, better than expected, 339 versus 316, and comparative same-store sales really crushed it up at 13% growth versus an estimate of 5% growth. So that's very, very strong numbers out of Burberry. So luxury brands probably trading quite well today. Maybe see a little bump up in CFR on the back of that. We also have Yum brands out today. KFC and Pepsi and Taco Bell and those guys. You'll see them after hours in the States today. Earnings per share expected at 54 US cents. Total revenue expected at 29.16 billion. So we'll start to watch earnings season as it plays out in the U.S. Got a lot of numbers out. Like I said, in Asia, we had tertiary industry index out of Japan that was better than expected, with a trade balance out of China, which was slightly weak. We also had import and export numbers that were quite considerable misses. Export numbers were expected as a gain of 3.7%. It came in lower by 3.1%. I mean, that's a huge miss. And we also had imports that were expected as a gain of 6%, and they were down almost 1% year over year. So, I mean, these are incredibly important numbers that we're seeing out of China, just highlighting the slowdown. I'm really surprised that we're actually not seeing a little bit more weakness in things like copper and things like that this morning. I don't know if it has to do with that they're expecting some sort of stimulus to come in China, but these are shocking numbers, and I think really put a little bit of a damper on the economy going forward. We also we have French industrial production, French manufacturing production today, and then U.S. we've got a whole bunch of stuff: NBA mortgage apps, wholesale inventories, crude oil inventories, and the Fed's going to release the minutes of its FOMC meeting today, which is going to be the key of the day, I think. All right, let's get into the maps. Okay, first thing I want to have a look at is IWM ARCA index. This is the Russell 2000 index. I don't have live data on this, so that's why I'm showing you, or I don't have live data on the index, so that's why I'm showing you the Russell. Either way you look at this thing, it's broken through to new highs. I think especially lateral resistance here around 99.50 is important. The big key here, I think, is that we're really kind of coming from this range. It's really well defined all the way down here around south of 95. I mean, this thing could have $5 to the upside, which just put us around 104.50. And I think also highlights where we're at with the indexes globally, and especially in the U.S. and what they think is gonna happen there and what's going on there. You've got markets a couple percent off all-time highs, with the rest of the global markets, especially emerging markets, quite a long ways off of highs. So I think this quite clearly defines what they think of the U.S. versus the rest of the world. You can see we're making all-time highs and new highs in the Russell here, which is really important. That small caps are are really trading well. Next one I'll show is the XRT, which is the retail index in the U.S. You can see looks very much like the Russell, also breaking to new highs. I mean, that's obviously really important as well. The retail very much is a leading indicator on U.S. economy and the confidence of the consumer. So this is really important. Like I said, same sort of thing. Like this chart looks very similar, but we've got a nice potential leg to the upside here in the XRT as well, continuing to push higher than this. Remember that if you didn't see last night, what was really interesting was that transports were through the roof. Obviously Dow theory, the transportation index kind of leads the way, and as long as Dow transports are trading well, the market's going to trade well. Dow transports were up over 2.5% last night at one point. I know that some of that was probably on the back of Bill Ackman, who is rumored to be taking a large stake in FedEx. So FedEx had a really good night overnight, but still a great outperformance there. I think it's really important for the market going forward. All right, let's have a look at RIMGRO real quick. RIMGRO, you can see here a little bit of resistance that it's kind of built up here at 190. If we just zoom forward a little bit, you can see this level's a bit it's starting to look a bit important. Or if we break above 190, I really think that it's possible for us to come back up and test all-time highs quite quickly. So watch RIMGRO. This thing just manages to kind of outperform on a daily basis, and it has been for months now. So I think it's important to follow that one and follow that one closely. All right, let's have a look at Anglo Gold. I'll actually jump into a 30-day on that. I'll show you. You can see here we've broken below support, or I say support, we've broken the new lows, and we really just started to consolidate below these new lows, really right at about 131 Rand. I think we can continue to push higher. I mean, yesterday's a perfect example. We got kind of a 2% push up in the gold price, and this thing just struggled the whole day, just couldn't get itself off the ground. I mean, it was up 1% in the States. Obviously, it wasn't enough to overcome the Rand strength, but the bounces are so weak, and the selling is so strong. So, John Paulson obviously has a monster stake here. It's his biggest position in the gold, and in any of his gold shares. You saw, if you didn't see yesterday, he lost 23% for the month in his gold fund last month. He's down 65% for the year. I mean, it's without question that he's going to be taking liquidations, constantly, and this is going to be one of the ones that he's probably going to have to liquidate. So be careful of Anglo Gold. I think on this breakdown here, we take from 150 or call it 151 to 31. We've got a 20 Rand downside target here, which would put us at 111 Rand on Anglo Gold. So be really careful with that one. Could have more downside there. All right, let's look at LBH. We'll go back to a year chart on this. And the reason why I want to show this is just because it's so clearly defined, this level here. It's right at it's just, I think, it touched south of 112. And you can see here, I mean, it's unbelievably perfectly defined, pretty much at 111. And we've kind of just been ranging. It does look a little bit of like a head and shoulder, but I mean, I think I still like the risk reward here. To buy this at support close to 111 and set your stop right below that on a closing basis. I think this could be a nice little play if we do get down there again. Like we said, it has been holding relatively well on this level for going back all the way to the beginning of the year. So yeah, and then they're coming out with numbers on Friday, which I expect to be reasonably good. All right, NTC. So Netcare, I'll shorten this up a little bit so we can see it better. And just see here that Netcare, same sort of thing as a couple of the other ones. Now, whichever way you would look at it, if you want to look from the wicks or you want to look from the close, or on the close, we closed right at support, right at resistance. But on a closing basis, we broke out. So I'll just take this line out because that's how I would look to play it. On a closing basis, we definitely broke out of this flag pattern, which was so clearly defined, I think. And you can see, a reasonable amount of upside, probably 2.5 Rand to the upside potentially in Netcare. All right, Discovery. I'm going to back out just a little bit in this, just to show, you can see Discovery here in terms of lateral resistance going through potential all-time highs is just a touch away from here. We can look here on a closing basis, it's the highest close is right here at 87. So we're only 50 cents below that. From the top of this candle, we're at about 87.50. So I would say somewhere between 87 and 88. We start to see this thing trading well, and I would especially say above 87.50. You can probably look to put some risk on here and Discovery. Like I said, like we've talked about before, these patterns, these sideways consolidations and breakups and continuation patterns like this have been literally the most reliable plays without question over the past year and a half. So these are the ones I think you got to take advantage of. And that's the last local one we'll show. Last one we'll show internationally. Macy's, same sort of pattern, continuation pattern that we've been looking at. I mean, whichever way you want to look at this, like I said, we're breaking out. Macy's is in that retail sector, which we just showed on the XRT earlier, listed in the States, which is breaking out as well. So I think this is definitely got some upside there. I would kind of say that it's possibly got about $4 upside from around the 50 level. So have a look at Macy's if you're trading offshore. And then the last thing that I'll show here real quickly is just I had a question this morning. Asking about what the expectations going into Fed numbers are, and what is there any particular opportunity that we can take advantage of going into Bernanke's speech? And what they're referring to, I believe, is the Fed minutes, which are out this afternoon, like we showed earlier. You can see Fed minutes there. FOMC meetings is tonight at 8 o'clock. I don't know that there are any particular opportunities that we'll be able to take advantage of with regards to the Fed minutes. Obviously, the market's expecting him to taper. I think with the data that we've seen recently, especially in non-farm payrolls on Friday, those tapering expectations have probably even increased a little bit more since the previous Fed meeting. So I just don't know how intuitive that can be since we had such monstrous data on Friday. So I would say that there's very little to play on in terms of that. I mean, I think provided that there's no surprises, technically the market's starting to look pretty good, and we could kind of continue to move to the upside here. So I really don't expect a big impact out of FOMC meetings unless they just really come with a real surprise that comes out of the meetings. And that's it for today, guys. Thanks a lot.